Reuters today. I'm Marian Bamard. Investors digesting more bad news on Deutsche Bank as it faces higher borrowing costs than its European peers. This comes as the German lender continues to struggle with a multi-billion-euro legal penalty for mis-selling toxic mortgage securities. Deutsche Bank is the only bank to pay to borrow over a 9 or 12-month period among 21 lenders, including Greek and Italian banks. Now, Deutsche is considered to be in a worse position than Italy's Monte dei Paschi and the National Bank of Greece. And now let's take a look at what stocks will be on the radar today. And from one German giant to another, Volkswagen in the spotlight after warning that it may slash more than 2,000 jobs per year in the next 10 years. German media reported that VW will move some workers into early retirement. The embattled car maker is in tough talks with labor leaders on cost savings and operational changes. Volkswagen has been weighed down very much by its emissions scandal since last year that has left the automaker in a string of legal battles. Investors also watching Ericsson, the Swedish telecom equipment maker, reported a 94% plunge in Q3 profits on weaker demand and struggling for market share. Ericsson shares dropped this morning 17% in early trade after its operating income plunged to around $35 million. And lastly, property investors will be cheering British house builder Telford Homes, which operates in and around the London area. The company says will not change its growth targets because of Brexit and that sales have remained robust recently. But overall, Telford says that it has built fewer homes in the last 6 months than last year. Let's turn now to markets to see how we stand in early trade. The FTSE 100 is lower this morning, very much under pressure, down about 0.5%, while the FTSE Euro First 300 is also lower. Top bankers warning this week they could start moving staff out of London as early as next year if there's no clarity on whether Britain will keep its access to the European single market. Executives from some of the world's biggest financial institutions told a conference in London they felt the government's position on free movement of access risked the wider economy. Some business leaders are worried about how urgently firms need to prepare contingency plans if the UK loses access following Britain's vote to leave the European Union. That's it for now. Don't forget you can follow us on Twitter at Reuters Insider and, of course, watch more videos online at Reuters.com. I'm Marian Bamard, and this is Reuters.